Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back. You're watching Traders Corner, and as always, I'm joined by Garth McKenzie, the founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, unfortunately, our punt on the resources probably isn't paying off too well, especially with that horrible trade data that was released by the Chinese economy yesterday. And we might as well start off with last week's trade, which was a fairly complex pairs trade, pitting the resources index against the industrial index.
Yeah, that's right. We did a pairs trade last week, which I've received mixed feedback on this, and I think a lot of viewers have emailed me and said that these pairs trades are complicated and the option structure that we've done is complicated. So we're going to go back to some of the more vanilla stuff this week. But having said that, we first got to look at last week's trade, which was the pairs trade, where we went long of the resources index and short of the financial and industrial indices against it. So let's quickly just look at the two charts and sketch the background here. Now, this is what's on the screen at the moment is a chart showing the relative performance of the resources index relative to the industrial index. Now, the fact that the chart is sloping down over there on the left indicates that during that point in time, the resource index was underperforming the industrials. But now what I've noticed over the last sort of 9 months or so is that we've got this large saucer bottom thing happening here. And we've also broken out through some overhead resistance recently on the chart. And my feeling was that this is probably the start of a period of potential outperformance of resources over the industrial sector. And that we could potentially build on this base that has been forming here. And I still tend to think that it's possible, but certainly the last week worth of trade is proving me wrong. All right. So that's resources versus industrials. Now the next chart here is resources versus financials. And a similar sort of setup. We've got a downtrend over here, which has been broken. And I see this also as a big saucer bottom, and the potential of a start of a new period of outperformance by the resources stocks over the financials. So what I did last week for the show was I did a pairs trade, but it was sort of a three-legged pairs trade, which is a little complex. But really all I'm trying to do here is take a bet on that outperformance of the resources sector over the financial and industrial sectors. So I used the Satrix products to do this, the exchange traded funds offered by Satrix, and I've gone long of the Satrix Resi, and I've gone short of the Satrix Indy and the Satrix Fini. The long position on the Satrix Resi was approximately 200,000 rands worth, and the short on the Indy and the Fini was 100,000 rand each. So you can see that the two are paired off perfectly. Yeah. All I'm really looking for here is outperformance by the resources over the domestic sectors. So that's the thinking, right? But is it working? Well, not really. So for all my complications, it's not really paying off, which is unfortunate. As we sit at the moment, those are the trades in white. Those are the trades that we did last week for the show. And you can see where we went long and short of the different products. And then the yellow text that I put on there now is the current prices and how we're sitting. So right now we're losing money on the Satrix Resi, we're losing money on the Satrix Indy, we're losing money on the Satrix Fini. All in all, I'd say this is probably a worst case scenario, other than the fact that we haven't been stopped out of the trade yet. And I said that the maximum loss tolerance that I'd be willing to accept on this pairs trade was 6,000 rand. And we're getting close. We're sitting here at 5,200 rand out the money at the moment on this thing. So I'm very close to cutting it and saying, well, that was a bad experiment.
Yeah, well, as you say, an experiment, but also it is worthwhile now and again to do things that we don't always do in the show. And yes, it's complex, but for some people out there, maybe it is something different. So,
yeah,
but
that's it.
I feel badly for you that it's all working against you at this point.
Well, you know what? You win some, you lose some. That's the game of trading. We never get them all right all the time. We've been doing this show now for 4.5 years, and every time we have a losing trade, my skin gets a little bit thicker. So, and that's the reality. This is real life trading. You don't win all the time. But yes, we also, in addition to trying to make money for our charity at the end of the year, we also do try and educate the viewers and provide them with new ideas, new strategies, new thinking, new products even. So that's the the kind of the line that I'm taking here. But having said that, we are going to go back to the vanilla stuff today.
Okay, well, I have to say, Garth, your skin's probably like rhino hide by now. Having to go out there every week and put it before an audience. Garth, so the platinum sector is actually what you want to focus on this week. And firstly, the platinum price. Tell us why.
Yes, that's right. So, I mean, obviously the platinum sector is really in focus at the moment because of the labour strikes in that industry at the moment. We're now into the 7th week of strikes in the platinum sector. We've got 61% of the South African platinum production that has been offline for 7 weeks now. That equates to about 42% of global production. Most of the mines do keep stockpiles for sort of 6 to 8 weeks. We're into the 7th week now. So you can understand that those stockpiles are starting to dry up quite significantly. And I saw a report the other day that a lot of platinum refineries, not a lot, but some platinum refineries have now started to stop operations on certain days of the week because there's just not enough ore coming out of the ground to justify operating every day. Yeah. So, painting that picture as a background, one's got to think that there's likely to be supply constraints on the metals pretty shortly, if not already. And we haven't really seen it being significantly felt in the prices of the metals yet. But if we start to look at the technicals here, I think there's very much potential for us to start seeing some potential move higher in the prices of both platinum and palladium, which is what we're going to look at now. Okay, well,
just before we get to that though, one of the reasons being thrown around by the platinum producers is that there's just so much above ground supply, which is what's kind of kept the prices depressed. But having said that, it has started to move up. So what do the charts tell you, guys?
Yeah, right. Well, look, here's the platinum price at the moment over the last year or so. What's immediately evident to me here is this formation of an inverted head and shoulders pattern on the platinum price. That neckline, that's what we call the neckline, that horizontal line there, that comes in at about $1,470 an ounce. And you can see that we have actually started to break above that neckline of that inverted head and shoulders pattern. So that is potentially bullish. And what you typically do with these patterns is you take the height of the head at its broadest point, and then you project that distance up to get a target price. And that points to a target price of $1,620 an ounce for platinum, which is around about 10% higher than where it's currently trading at the moment. And if we think about this, the technical picture, tie it back to the fundamentals that we've just spoken about now, it does all seem to say the same thing, that there is likely to be upward pressure on platinum prices, certainly more than downward pressure, I would think. So that's the price of platinum itself. Now the other metal which is also in this PGM basket, the Platinum Group's metal basket, which is a popular one, is palladium. And here the evidence of the strike action is actually a little bit more pronounced, interestingly. Notice that there's this large triangle pattern that has been forming over the last year and a half, and all of a sudden now we've started to see this very bullish breakout through the top of that resistance level. That was at $750 an ounce for palladium. And that is a very powerful breakout. You would now think that any pullback towards that $750 an ounce area, that would probably now act as support. But this breakout is powerful. It's taken the price to a new year and a half high, and we've got the potential to probably continue moving higher off these levels.
It almost looks like a healthier chart than the platinum price, and it's also, I think, on Russia worries there because Russia's a big palladium producer, that the palladium price has ticked up particularly.
Yes, that's right. That's another potential risk in the mix as well. If they have a supply disruption because of the political issues that are happening over there, that could also feed into the prices of these metals. So I think all in all of these things are talking to the possibility, the distinct possibility, that we could see upward pressure on the prices of the metals.
Okay, but you're not actually going to be trading the price, you're going to be trading a share?
Well, potentially. I'm not actually trading a share or anything this week. We're not putting on any new trades. You can trade the metals, but particularly you can trade platinum. There are ETFs. The New Gold Platinum ETF is listed on the JSE, and then there's also a platinum commodity future that is listed on the derivatives division of the JSE, so you can trade it there as well. Just keep in mind, however, that those are the rand price of platinum represented there. So you've just got to take the rand-dollar exchange rate into consideration when trading that as well. Okay. But certainly there is a way to take an exposure to the metal via those two products. But what I'm really looking at this week is just to say I'm going to be keeping an eye on Anglo Platinum. Anglo Plats is the biggest platinum producer in the world. Obviously, a fair chunk of their production has been knocked out by the strike. But also at some point one would expect that the strike probably will resolve itself, and then probably we will see production resume. But by that time, it's very possible that the price is higher, the price of the metals. What I like about this Anglo Platinum chart here is that we've got this big overhead area of resistance at 465 Rand on the share price, and we've got this big cup and handle pattern that has been evident over the last year on the price of Anglo Platinum. Now, in the more short term, we've got an ascending triangle that's busy forming over there at the moment. The bottom of that ascending triangle comes in at around about 440 Rand per share, and the top there, we're talking at about 465 Rand for the top of that triangle pattern. And what you typically do, if we see a breakout through 465, that will be very bullish. And then what we would look for as a short-term target is for a move to 520 Rand. But as I say, that's a short-term target based purely off that little triangle structure. If we look at that whole cup and handle pattern, you could justify a much higher price target for Anglo Platinum if we see a break through that area of resistance.
So that's sort of a commensurate, in fact, that would be higher, for example, than if the platinum price were to tick up 10% or so, which was what the chart suggests it might. That would be sort of leverage to that, so it would be a bit higher than that.
Yeah, that's right.
If your target is 520. Garth, is it just Anglo Platinum, or have you looked at some of the other platinum stocks?
I've highlighted this one because out of the platinum majors, this one looks the best. Okay. Impala Platinum doesn't excite me very much, Northam neither. So in terms of the platinum majors, this is the one that to me looks like it's got the strongest potential to break higher.
Okay. So what does the portfolio look like, if considering that is a share that you're just going to watch, you haven't actually entered into a trade there? How are we looking?
Yeah, well, these are the open positions that we've got on the portfolio at the moment. So we've still got our option structure working in the background for us, which we will focus on more as we enter the second quarter of this year. And then that pairs trade, which we discussed at the beginning of the show, between the resources and the industrials and financial sectors, not working well at all for us. There we're sitting with a mark-to-market loss of 5,200 Rand. And as I said, my maximum tolerance for a loss on this thing was going to be 6,000 Rand. So we're getting close to that point where I'll probably pull the plug on it and just say, right, didn't work. So we're down a little bit from last week. We still got 283,000 Rand in the account, so we are still up 13.5% for the year to date. So it's still good. But obviously the performance has been overshadowed a bit by this pairs trade that's not looking good for us this week.
Garth, is it going to be quite tricky to extricate yourself from this pairs trade, or is it a simple matter of just cutting out of the positions?
It's easy to unwind it. You know, there's market makers in these ETFs all the time making bids and offers. So there's no difficulty in terms of liquidity in getting in and out of these things. So it's very straightforward.
Okay. So a bit unfortunate that it's all gone pear-shaped, I suppose, if you excuse the dreadful pun. All right, so Garth, not a great week for the portfolio, but you actually haven't had a losing trade yet, so I suppose this is the first. So
yeah, it was inevitable.
It was inevitable. It had to happen. You can't carry on that winning streak. And Garth, upcoming courses, I know you had one over the weekend and also last week. Anything shortly?
Yeah, so I've still got more coming up. I've got the 27th of March. I'm doing an Understanding CFDs course in Johannesburg, a high probability trading course in Johannesburg on the 29th of March. And then my face-to-face sessions are now going countrywide. So we've got one in Johannesburg on the 26th of March, and then we're doing a roadshow down to Cape Town and Durban on the 2nd and 3rd of April. Those face-to-face sessions are live interactive sessions where we discuss, debate things in the market, and it's very interactive. It's not a typical death by PowerPoint type of presentation, which has been so overplayed. This is now something interactive where you can interact with me and my colleague Andrew Todd, and we can discuss and debate and bounce ideas around in the room. Okay. So if anybody's interested in attending any of these things, please email me, garth@traderscorner.co.za, and I'll send you the details.
Great. Garth, we'll leave it there. Thanks as always for joining us.
Thanks.
That's Garth McKenzie, founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.